All right, guys. So this is a video breakdown of a trade idea that I shared with my group. And it's more going to be what I want you to do out of this is basically write notes, understand my thought process, understand how I'm reading the charts, understand, okay, you might have a different strategy, but how do you read it in maybe not, I don't want to say a different way because I'm not just going to assume that your way is incorrect or whatever, because everyone trades their own way. There's no right or wrong way in trading. But maybe there's something you can add to it, or if you already are doing it and this just gives you a better understanding, then fantastic. But yeah, this isn't like this is right, what you're doing is wrong, like a lot of videos out there, because it's just completely unnecessary. But what I want to do is just show you the thought process of how I came up with this trade idea. So first things first, I'm going to go into the Discord group, show the trade idea that I did before and after what I was predicting, and actually what happened after that, and I'll break down why I thought that was going to happen. So first things first, just go into Discord and be in a group chat somewhere. If you guys are interested in joining my community, then just join the GGFOREX Facebook group down below and message me about wanting info to join, and I'll just send you info about joining. But where is it to begin with? There's quite a few predictions I was doing with the group. As you see, the guys were absolutely crushing it. This was a while back. Where was it? Here it is. Where is it? Here it is. Right. So I sent this to the group at where was it? This was at the 13th of Feb, and this was 12:15. And then I'm pretty sure afterwards, Price sent it. I don't know if I did a post up afterwards. Maybe I didn't. All right, so that was the group. That was the thing I sent to the group, right? It was the 13th of Feb. As you can see here, we're on the 13th of Feb. And this is my thought process, right? This is what I thought Price was going to do, and it actually did it. So if you have a look here, what am I seeing altogether? Right? I'm on the 15-minute time frame. If you actually have a look at what the price action is doing, okay? So let's just zoom out. Go to the 1 hour time frame. Right, ignore these markups. This is what I'm doing recently. But if you have a look, right, price is going lower low, lower high, lower low. So I'm expecting price just to continue the trend to the downside until proven otherwise. That's on a 1 hour time frame because this high broke this low. So we've got a break of structure. Price is now just retracing back into the area where price originally sold from, right? This is the bit where people are broken. So you'll hear a bunch of different versions of like, oh, it's coming into this breaker block, Tango, Foxtrot, Delta, whatever. All right, doesn't matter. All we can see is that it's bearish on a high time frame. Cool. What do we need to look for to see if price is continuing to be bearish now? Well, 50-minute time frame. What do we get? We have a breaker structure, right? We see price this high broke and closed below this low. If it was still bullish, right, then this low should have been protected. It should have been a higher high, then another high or higher low, then another higher high. That didn't happen. Price closed below this low, meaning we are potentially bearish now, right? So the 1 hour is bearish. Now the 15-minute is bearish. What else do we see? Well, we see a huge manipulation to the downside, which caused this breaker structure right at London Open. So right when I like to trade, we have a manipulation of liquidity during Asian, and I'll go into that in a sec. But right at London Open, time and price is saying, hey, this has caused a breaker structure. Okay, cool. So let's just zoom into this price action. What actually happened? Which, as you can see, we have multiple levels of liquidity. We have trendline liquidity here. That was liquidated. We also have trendline liquidity here. That was liquidated. Right? So we've broken structure and we've taken liquidity to the upside. So now it makes sense to continue price to the downside. But in order for us to get an idea that price wants to continue to the downside, we kind of need to find clues for more liquidity, reasons for price to continue to the downside, right? So let's just have a look around, see what price has created since then. Well, if you have a look here, we have equal lows. So if you guys don't know, equal lows, liquidity, Equal lows and trend lines are areas of liquidity for me because people will be putting their stop losses there, or like swing highs and swing lows as areas of liquidity for me as well. So people will be putting stop losses there. They will be doing support and resistance there, whatever it is, right? What else do we have? Looking further down. Okay, we have more equal lows. Do we have some form of trend line liquidity going on here? Yes, we do. You want to be like that? That could be an area of liquidity as well. This form of trend line, people will be looking for 1 bounce, 2 bounce, 3 bounce, 4 bounce. Maybe they're looking for price to come down again and move higher. All right. So we got multiple areas of liquidity to the downside. Okay, cool. Where's liquidity that can be taken still? This internal high here, right? Why is that? Purely because people are thinking it's going to sell off. Maybe they want price, they see these equal lows. Maybe they're thinking, all right, the swing high, equal lows. I'm going to enter off this resistance, stop loss above the high and target these lows. Like for me, that is not very smart because there are reasons for price to continue to go higher. So if you have a look at my point of interest or where I thought price was going to go higher, right, which is this 15-minute order block. Why that one? Because that one happened at London Open. It also liquidated liquidity on both sides, and it has broke structure and made more liquidity. That is why this area stands out to me. Okay, so that was the whole breakdown. So if I go back to the Discord and show you exactly that area, I actually did it on the 1 hour time frame. So let's just scoot over to the 1 hour time frame a sec. You can see that 1 hour time frame, that candle, and within that 1 hour time frame, if you wanted to refine that area, you have a 15-minute order block right there. Right, do a little bit lower just to cover that bottom wick. All right, there. So if you wanted to, remember this was CPI day. So usually during CPI 1, it's super high risk. Okay, so if you were to set a pending, you have to be doing it on the account that you can potentially lose because this is wrong. It can blast through your stop loss. Like instead of risking 1%, you might actually lose 5, depending where it actually takes you out the trade. Obviously, if you're doing it on a funded account, then potentially you can break your daily drawdown rules. So make sure this is on an account that if it is funded, it's not going to wipe out all your funding. Okay. So let's say you've got 4 100K accounts. You maybe want to try this out on one of those accounts and not link them together. Because when it does work out, it works really well and it's super effective. All right. So that's what I sent to the group at 12:15. And if you have a look at the time now, roughly it's 11. So when was 12:15? When I sent it to the group, what I was going to ask? There you go. So roughly here is where I sent that analysis to the group. And right at that time, what do we see? Equal highs, right? Equal highs playing in. So this is technically more areas of liquidity. Okay. So we're in this sort of range at the moment. So right before CPI news, what am I expecting to happen? I'm expecting a form of liquidation, mitigation, and continuation. Continuing with what? The higher time frame. So if I just draw a pending up here of how you could have played it, and again, making sure you're being extra safe because again, it is CPI, a little bit of pad above the high, then you could be really safe, target the first area of liquidity. You can be a little bit more gutsy and target the low. Normally, on a normal situation, I would just target this area right here for 1 to 2 and a 0.6. However, knowing it's CPI, knowing how violent it can be, I'm thinking that price could continue all the way and take out the external liquidity right at the bottom for almost a 1. Let's just go for 1 to 5 because people on YouTube like that for some reason. Right. Again, most of my targets are logical areas of interest, logical take profits. Like, again, these sets of equal lows or these sets of equal lows. But in real life situation, I've said it many times before. You haven't seen my videos before. A 1 to 2 is all you need. So again, this is all you need. However, external factors are CPI. I know how violent CPI is. It can easily move 100 pips in no time at all. Right. So that is the technical breakdown of it. Price is bearish on a high time frame, We've now gone bearish on the time frame slightly below it, so 1 out of the 15-minute. We've also created liquidity as we're going along, and we know that there is some high impact news coming out that makes sense for these sort of manipulations to happen. So we just let price do its thing. Boom, 1:30, and literally within probably a minute, price has triggered you in and taken you out at take profit, maybe slightly more with slippage. But can you see how effective that price action is? It's understanding what the high time frame is doing, what time and price is doing. Again, London Open manipulation, which caused a break of structure, but gave us the clue of maybe slight weakness and continuation with the high time frame trends now, and then creating liquidity along the way. But yeah, let me know if you want me to do more of these videos, guys, because I really do like breaking them down, hopefully simply for you, and understanding how liquidity is created and taking out as price is playing out. But yeah, that's my areas of liquidity. If this helps, let me know in the comments down below, and I'll see you on the next one.